Welcome to Blockstream Talk number 7. Our conversation today is with Tuur Demeester. I always really enjoy my conversations with Tuur because not only does he have a really good understanding of macro markets and Bitcoin, but his analysis always brings a really unique and interesting historical perspective. And I think that can be particularly valuable when we zoom out and think about where Bitcoin and Bitcoin-linked investment products are going and how they'll impact legacy markets and really the world in general. So I was keen to get Tuur's thoughts on a couple of subjects: his initial impressions of El Salvador's Bitcoin bonds, if and how Bitcoin cycles are changing, as well as Bitcoin-backed mortgages and the types of financial products we're likely to see emerging as Bitcoin goes mainstream. Don't forget to like, subscribe, and share. I hope you enjoy the conversation. Tuur, thanks very much for doing this.
My pleasure.
Great. So I think most of our audience is probably familiar with who you are and kind of what you've been working on. But for those who aren't, do you mind doing a quick introduction?
Yeah, sure. I am a writer analyst. I've been in the Bitcoin space since 2011. I started off being a global macro analyst. I had a financial newsletter. People would subscribe to it, and then I would, from like a macro analysis, I would then eventually come up with investment ideas that I shared. And so one of the early themes for me, and has always been, is to deal with the risks in the financial system and like find investment answers to that. I've always been scared of inflation, and banking crises as well. And so for me, early on, I was a bit of a gold bug, but I kept on looking for other answers, and so that's how I ended up finding Bitcoin. And over the years, I've published several reports that people know. Always like trying to find that bottom in the Bitcoin cycle. And also the Bitcoin Reformation was a report I did in 2019. And I love writing about Bitcoin, and I often try to find historical analogies or just angles that work, and that ultimately I'm just trying to find answers for my own problems, and then often that ends up helping other people too. And I've invested in a few startups over the years, like in Kraken, and one of the first mining companies here in Texas, and a few other startups. And then last year I sold my I guess I did a small hedge fund as well, which was a Bitcoin alpha hedge fund where we used Bitcoin as a performance benchmark. And then last year I sold that company to Blockstream, and now I'm honored to be an advisor to Blockstream.
Oh, that's great. How big of a trigger for your interest in Bitcoin was the global financial crisis?
Yeah, well, I started really reading like Human Action, Mises, Rothbard, and some of the other Austrian literature writers. In 2005 is really when I started,
Okay.
and then 2006, like that ramped up, and then it was so eerie to like read about the history of banking, and then slowly hear the rumblings in the U.S. and then fearing like, is this going to blow over? Because I was in Belgium at the time. Um, it was a really big part for me. It was like a catalyst. It was like I was doing other things, and I was like, man, I really want to understand this, because I don't want to be stuck in some kind of store where I'm selling some widgets, and meanwhile there's this 10-year depression that lands down on my country, and I just get stuck. Like that was my nightmare. So I always try to stay ahead of things. So yeah, definitely it was it accelerated you know my doing this.
Yeah, I think it was the same for me after the financial crisis. Kind of left like with a lot of questions, like, has this been resolved? Everything seems like it's just getting worse, and the can is getting kicked further along. And it raised a lot of questions, and I think for me, Bitcoin seemed to answer a lot of those questions. So it sounds like it was probably the same for you as well.
Yeah, because the answer I had found for myself was like, look, in an inflationary depression, what you want to own is something that is highly liquid and something that has low counterparty risk. Like that's the best I came up with at the time. And that's been my focus. And so Bitcoin was like, when that came along, the main question for me was like, is this really scarce? That was the big one that took me a few months to grok and to really understand that it was actually scarce. You couldn't just, double spend stuff. But yeah, absolutely. Like those two, and they just, I feel like they're still valid today. Like, especially in this environment, like who wouldn't want something that you can sell universally, and that you can store literally yourself, or now with multi-sig even safer than that.
Yeah, exactly. So one of the things I wanted to get in today is the El Salvador Bitcoin bond, right? So the ticker EBB1 is kind of like what we've been using. I worked with Samson to help build this thing, and Samson pitched it to El Salvador and got them interested in it. I'm kind of curious to hear what your initial impressions of the bond are.
I was so excited. It was like, my God, like, and then even the whole story around it. Like first there was some, El Salvador adopting Bitcoin as their, national currency, and then it was like, oh my God, they can do, volcano mining. Like that's amazing. and
Yeah.
and so now we have these volcano bonds, which is an incredible way to, don't say it too loud, but to short the dollar, right, against Bitcoin. It's kind of this very slowly ramping up speculative attack on the world reserve currency, which, of course, the motive is not to undermine the dollar. The motive is just to, to have a sound, product in the market. But yeah, I was just super excited to hear. And I found, I had this vague memory of like, didn't I talk about this stuff with Max Kaiser back in the day? So I found this chat that we had in London in 2014, where we were like, he was saying like, oh man, like, where is going to be the Bitcoin Shangri-La? Where is going to be the place where, that's going to embrace Bitcoin for what it is? And we were talking like, yeah, maybe like a small country or something like that, maybe Switzerland or Panama. And then it's like, man, it's only 7 years later, and it's happening. It's incredible.
Yeah, I was the same way when Samson called me up and said, "Hey, we're talking to El Salvador. We need some ideas on a sovereign kind of debt issuance for them." And I was just like blown away. I was just like, if we can get this across the line, this is going to be massive. And this is kind of what I signed up for. I mean, this is why I joined Blockstream, was to be on the tip of the spear of this kind of stuff, because it's just so exciting, and the implications are massive.
Well, and also like now the futsters are saying like, oh, but it's just a small country. It's just a tiny.
Yeah.
It's like, dude, like you have no idea. There's 200 countries in the world. Like this is, the dam is breaking. Like this is a monumental milestone. And of course, it's going to be a small country that doesn't have much to lose. But it's like symbolically, it's so powerful.
No, if you look at the incumbents of the global financial system, I mean, they're incentivized to keep the status quo, right? So it's definitely, the change is going to come at the periphery. That's where it's going to happen just naturally, from everything from this kind of thing to security tokens to sovereign nations adopting Bitcoin. It's not going to come from New York and Wall Street. That's the last place. They're going to fight it kicking and screaming.
So if you don't mind, this is actually where I'd love to turn the tables a little bit, because
Thought you might.
you were actually, responsible for the initial draft design of this stuff. And so I want to just, can you like tell a little bit more about how that went? Like how, what were the things that you heard that El Salvador was looking for initially?
Yeah.
And then how did you end up translating that into this, EBB1 bond?
Yeah, so I think definitely like Samson had an opportunity and an idea and some introductions, and then we kind of worked to flesh it out. But a big part of the structure was we needed it to be attractive to them as well as to investors, right? So we needed to make sure it would reduce their cost of capital, and that it solved problems for El Salvador in terms of their funding demands, and then also needed to be attractive to investors. So that's kind of why we set the coupon at 6.5%, because we thought that was it was a little bit higher than half of their their recent value weighted average coupon, and then certainly significantly lower than where the yield on the bonds is trading at the time. So that was kind of the reason why we set it there. We also wanted you definitely look towards what Michael Saylor and MicroStrategy are doing, and how do you use Bitcoin's long-term trend of price appreciation to kind of leverage it in favor of both the investor and the issuer. And this is kind of the idea we came up with. And then some other things, they had floating around that I think were slightly more nebulous, like the investor immigration program that they had. I think that's very attractive to people, but, international real estate investment is just, everyone knows that's just a pain in the butt, right? To actually go and execute and maintain. And there's no liquidity to it. So it's an interesting idea. And I looked back at Malta and, we've got people at the firm that live in Malta, and I think that what they did in 2017 with kind of embracing Bitcoin and blockchain, it resulted in a lot of immigration and a lot of investment for them. And I thought, if we can improve that and make it more liquid, I think it'll be, you could easily find 1,000, Bitcoin investors that would put $100,000 in. I think you could definitely do that. I mean, there's a lot of people that just from the tax perspective, no matter where you are, if you're in the US or other countries, I'm in Taiwan. There's lots of people here that would like a plan B, so it's a good way to do it. I think there's a lot of interesting components to it.
Yeah, and it's just so interesting to, because you were talking about 12% is something like that. Is that their normal coupon?
Yeah, I think it's so their last big bond, they had $1 billion issuance, which was 9.5. But their weighted average is above that.
Yeah, I see. And then I don't know if I heard that correctly, but did you say so it had to be below that, but then you wanted to trade a higher percentage, a higher interest rate than like a MicroStrategy bond, because we're talking about maybe slightly less, just a different profile.
I didn't really look at that, but I wanted it to be competitive to people who are in the Bitcoin ecosystem already. So where can you put Bitcoin to get yield? Where can you put Tether to get yield?
Oh, I
Because
see.
I think this thing will kind of evolve to be like the third leg of the stablecoin market, right? So if you've got within stablecoins, you've got US dollar stablecoins, which are the big part of it. And then you've got the gold-backed stablecoins, which are not that big, but they're getting bigger. And this thing, even if you look at El Salvador sovereign debt, the volatility on it is higher than either of the first two, right? Like tokenized gold or tokenized US dollar, but it's lower than almost everything else in the digital asset space.
Oh,
So I think it could be like the third leg of it. I mean, there's also quite a bit more transparency, I think, with a sovereign debt issuance, depending on how it's structured and executed, than a lot of what's going on in the stablecoin space. So I think from that perspective, the risk profile for people who are used to investing in Bitcoin and other digital assets is probably lower than a lot of the other ways that we currently store value within the space.
so we deviated a little bit from kind of like describing how your thinking process was. Do you mind continuing? I think you were just talking about deciding on the percentage of the coupon, and then like throwing in the immigration program, which is probably like, what is it, like $100,000 minimum investment, and then people get like residency or something.
Yeah, so you'll get fast tracked you'll have the ability to apply for citizenship, right? A passport. And then you've got to meet whatever standards that they have, but you're put on a path for eligibility.
And then what else did you think about in terms of the structure of the bond?
The duration of it, like how long do you want it to last? So, we look back at their precedent offerings that were kind of like in the 10-year time period. And then how long do you want them to lock up the Bitcoin? So we put 5 years on that, and then start trickle it out after that. I think that's a fairly good bet. I think most people who are, who have been in the Bitcoin industry for a while, we're pretty comfortable that in 5 years, Bitcoin price will be higher than where it is, higher in 5 years than it is today.
So just to kind of like recap what I remember, and correct me if I'm wrong. So it's like they're raising $1 billion.
Yeah.
500 million of that, once they raise it, is going to go straight into just buying Bitcoin. All those Bitcoin are going to be held. Just correct me if whenever I say something that's wrong. All those Bitcoin are going to be held for 5 years, and then after 5 years, there's on top of the $6.5% dividend, there's a Bitcoin dividend that kicks in. Is that right?
Yeah, I would walk it back a little bit and say that's the structure now, and that's my understanding, and I think the firm's understanding of what the product will look like eventually. They're very motivated. They're a motivated issuer. A lot of the details are going to come between, they need to set up a whole regulatory framework. So Bitfinex is
Yeah.
helping with them with that. So it depends on what details come out of that. Bitfinex needs to get a license, and then we need to formally put everything down to paper and get them to sign off on a lot of the details. But conceptually, that's the way it's supposed to look at the moment. I think one of the big components that we need to add into this, and I think it would make sense for them to agree on, is to custody that Bitcoin, that $500 million, with someone like a Fidelity or a NYDIG or someone like that, and you lock it up. And I think that significantly offsets the default risk, right? So that's the big risk of investing in kind of emerging market sovereign debt is, they tend to be politically unstable. Who knows what the next government will do? But if we take that Bitcoin and lock it up, and then they get access to it at 5 years, but then we only dribble it out on a quarterly basis. I think that'll give investors a massive peace of mind, and in that situation, a 6.5% coupon might actually look really attractive even to the traditional bond guys.
Yeah, and so I mean, I guess we're speculating because we don't know the exact terms that are going to come out of El Salvador, but is your understanding that like the 500 million that they're going to buy and they're going to lock up, is all of that going to be distributed back to the bondholders, or only, I think it's half of it, right? Is that the plan?
Yeah, kind of. So after 5 years, then it's unlocked and they can stop selling it, but they want to recover that 500 million first, right? So they get first dibs on selling it and recovering their 500 million. Now, this depends a lot on where the Bitcoin price is, right? If Bitcoin price is at
Yeah.
500,000 or $1 million, then they can recover 500 million really quickly. The way we have it set up right now is that, if they can buy, X amount of Bitcoin, 500 million at the price today, 50,000, then they get, a couple thousand Bitcoin and they can let I guess a couple hundred go every quarter. You'd be prorated.
10,000 Bitcoin, right?
Yeah. So and then divide that by 20 quarters, and that's what they could sell on a quarterly basis. And the reason why we split that up too is that you don't want to have a massive price overhang, right? You want to be able to they'll dribble it out and have it in a size that the market can absorb. And maybe after they recover, maybe they decide they don't want to recover their 500 million, right? Maybe they decide they want to build a strategic Bitcoin position and keep it. So at that point, we'll have to have terms set up where maybe the investors can start getting their Bitcoin back or monetized at kind of an earlier than expected schedule. So all of that stuff needs to be documented and kind of fleshed out.
Wow, this is fascinating. I mean, to me, this reminds me of people say like, oh, back in the day, like there weren't as many, lending wasn't as big a big an industry. Some people even, I think, Saifedean argues like, in a hard money society, we don't need any debt. But my understanding is the way the debt industry used to work was more like with kind of like annuity like structures where basically you have a certain, you borrow something, and so you vow to pay back that same thing, like whatever, 1,000 florins of gold. You pay back the 1,000 florins of gold, but then the interest is expressed in something that is more variable and more close to your strengths as a borrower. So, for example, if you're a farmer, the interest is going to be in percentage of wheat that you happen to harvest that year, or the next 10 years or something like that. So that makes it a lot more bearable for the debtor to repay. And so, I mean, I'm just kind of thinking out loud here, but it sounds to me that like Bitcoin bonds are opening up some of those possibilities where instead of like borrowing in hard dollars and then having this fixed interest rate that haunts you potentially, and where you can be much more flexible because you have currencies of differing scarcity that you're playing with.
Yeah, no, I agree. And that's so people who have asked, so I've had a lot of calls with credit analysts and people that are investing in distressed kind of emerging market bonds already. And they're really interested in, I think, primarily how this product will impact the investments that they've already made. And I think a lot of people also think it's, especially more nimble investors, this is something that sounds kind of interesting to them. And that I think there's probably a greater amount of institutional demand for this thing than people anticipate. But, one of the questions you get is, how crazy is this thing? Is this a really kind of insane idea? And I think countries like El Salvador are in a tough spot, right? So if you're an emerging market economy, the big question is, how do you become not an emerging market economy? What's the path to go from emerging to developed? And is that path just to continue borrowing from the IMF? How successful has that been historically? And you look at some of the precedents that have been really successful in navigating that. And of course, I'm based in Asia, so I look to like the four Asian dragons, right? Like Taiwan, Singapore, Hong Kong, South Korea. How did they get out of that kind of downward spiral? And the answer is, they embrace free markets. They invest heavily in technology and heavily in infrastructure. And when you take a step back, this is kind of what I think El Salvador is trying to do, right? So, you've done a lot of work on kind of historical analysis around Bitcoin and economies. What do you think about that? Like, what is the path forward for emerging markets, and to not become an emerging market, and And how does Bitcoin fit into that as a driver for growth?
Yeah, I mean, I think what you're saying is correct. Like that is the way to go, and a willingness to plug into this open source. It's almost like an open source instant rule of law system, like you're saying, working with a Fidelity or with some trusted party to guarantee. And you can use technology too, probably, to help with maybe locking up eventually coins in a contract or something like that. And so really having a willingness to embrace, and then navigating all the scams in the crypto world. So I think that's a big deal. It's a really, really big deal to kind of skip having to work with the IMF and all these kind of whimsical bureaucratic systems that can end up working against you. I think
And they historically haven't been that successful, right?
no, I mean it seems to be more like a debt trap. Like if you look at
Yeah.
how people in ancient Greece became enslaved, it was just the same. You would have debt, you couldn't pay it off, and your son would inherit the debt, and so you had generational debt, and that became slavery. I mean, so it's kind of like, how different is that from where these emerging economies are in right now? Wouldn't you rather open up your economy, have a bunch of Bitcoiners come in, allow people to save in hard money, and then issue debt also with the government showing that they're hodlers? It's leading by example. I think one of the main things that you cannot get around probably is kind of like the willingness to kind of up the ante when it comes to rule of law, because eventually there will be conflicts in the economy, or even no matter how hard the money is in your society, there will be disputes, there will be potential corruption and things like that. And so that's where I think any country will have to prove itself to really, and I'm talking about, if you're really aiming to be the next Singapore or something like that, you're going to have to really, and you can do that by inviting immigration too, right? I mean, if you invite a lot of people to come over and kind of build a new city, and help build this infrastructure of courts and legal systems, maybe that goes a long way.
Yeah, that's an overlooked part. I mean, part of the success of Singapore and Hong Kong was, I mean, this won't be popular, but British colonialism and the rule of law. I mean, that's just the fact of it. That's why, Hong Kong and Singapore became Asian financial hubs because of the rule of law.
I mean, ultimately, if you start a business, that one of the first things you want to know is like, okay, what if things go wrong? Like, can I count on a judge to be kind of incorruptible, or is he going to be bribed and I'm going to lose every time?
Yeah, and in terms of Bitcoin as a growth driver, like, I mean, you're really seeing that become a more common theme no matter where you are, right? So you look at whether it's municipalities or nation states or states within the US, right? We've got like Miami and New York looking to, promote Bitcoin. You've got Texas. Ted Cruz has been out there super vocal about Bitcoin and Bitcoin mining. And then, a number of countries around the world. I mean, a couple of weeks ago, I saw news out of Laos, the country of Laos in Asia, investing heavily in Bitcoin mining to drive growth. So it's not that crazy of a thing what El Salvador is doing. There's a lot of examples of companies, countries, cities, states, all looking at Bitcoin as a growth driver.
Well, and maybe this sounds extreme, but I don't think so. I mean, ultimately, they're all corporations, right? Nation states are corporations, cities are corporations. They're all kind of, to an extent, they're profit driven, and to an extent, they need to listen to the market and try to compete with. Miami is competing with Austin and all the other cities, and El Salvador is competing with all the other Latin American countries, and so and all the uh, S&P 500 companies are competing with each other and around the world. And so, yeah, I mean, all the things that we're seeing in the corporate world, like where clearly MicroStrategy has, like, pulled a couple aces. Everybody's looking at that, but countries are just another form of corporation, and they're looking at El Salvador as like, man, like, should we consider something like that as well? Like, that's why I think this is so huge, because it's this mental switch.
It is, and it's a template, right? So other companies have looked at what MicroStrategy is doing, and it's an example that they can look to, and I think that has probably infected a lot of the listed miners. Like if you look at the listed miners, they're trading at significant premiums, and I think a lot of that is because there is a massive amount of Bitcoin interest with mainstream traditional and institutional investors that's been frustrated by regulatory and mandate limits. So these listed miners have seen what MicroStrategy is doing and how they get rewarded for having a Bitcoin balance. So they've adopted that. I think, a lot of miners previously didn't necessarily do mine and hold, right? They would mine and then dump Bitcoin to pay for their expenses. And now they're all holding Bitcoin and trying to build up a big Bitcoin balance. And the ones with the biggest Bitcoin balances are getting some of the biggest premiums. So I wonder if this will bleed over into countries. And I think this is the exciting part for me, is that if we can successfully, we meaning Bitfinex, because Blockstream is just doing the protocol, we're not doing distribution, and we're certainly not licensed to do that. Um, just a little compliance note in there. If this project can successfully allocate $1 billion, or if we're like 2 times oversubscribed, it's going to shock a lot of people. And I think it's going to be a template that a lot of other countries, we haven't heard much out of Africa. I know there's a lot of Bitcoin demand in Africa. There's probably a lot of funding demand in Africa too. Maybe another country will adopt it there, or countries in Asia. So I think it becomes a template that other countries can look to, and that's when it gets really exciting.
And I mean, and on the flip side, and I feel a bit nervous saying this, but it could be a spark, or one of the sparks that leads ultimately to a bond market sell-off or a crash, because if because it seems to me that sovereign nations, they always have to roll over their debt, and so they have to reissue and convince new investors to buy their stuff. And so if existing holders are like, I don't know, I'm not so sure anymore if I'm willing to pay all this money for such a low coupon, maybe you guys need to issue a higher coupon. Well, that's ultimately how bond crashes start, is that the interest rates ramp up, if I understand it right. So I don't know what you think, but I think it's like one of the potential outcomes of this.
Yeah, I think so. Yeah. So what do you think the world looks like if we're able to successfully fill $1 billion of interest? What do you think happens after that?
I mean, it's like, especially if they can do the first billion and then they issue a new one, and that one is starting to get filled up as well, then it's like, whoa. I think that is like going to be like I think right now it's like, oh, it's just a story, but like once the cash is in the bank, whoa, I think people are going to notice big time.
I think so too. I think it'll be a big driver for Liquid, because then it becomes a big pull factor. Is that people want to figure out ways to integrate with the token and to get enabled on Liquid, and it also opens up the opportunity of maybe we don't, maybe we skip Liquid, maybe we do a traditional bond issuance, maybe God forbid we team up with a bank, we do a traditional bond issuance that is the exact same structure, right, where it's still buying a big chunk of Bitcoin. And, one of the questions I've got from some of these kind of traditional investors is, if this is successful, does El Salvador then walk away from the traditional bond market? And I think probably no. They're obviously invested in their previous issuances and are worried how this will impact it. And I think it's probably positive, right? If it works out the way we think it will, it improves their ability and their willingness to pay off their debt outstanding, right? So I think it's a win for everybody.
Yeah, and I mean, instead of a little country only having, some earning capacity by being able to raise taxes, it's like all of a sudden they have a war chest.
Yeah.
A growing war chest with which they can pay off fiat debt.
Maybe shifting gears slightly, what do you think are other, because you're experienced with Adamant and running a hedge fund, what do you think are other products, financial products other than Bitcoin itself, or, the blockchain mining node or EBB1, that you think the Bitcoin industry can offer traditional investors?
Just a thought I have to get out. That was about what we were talking about previously. Is just I was just realizing, like, or wondering, like, isn't this, if this works out, isn't this going to be the most liquid sovereign bond in the history of the world, or something like that? Like in terms of accessibility, I'm not, licensing of course needs to happen and everything, but because like stable coins are so liquid, it's so easy. Anyone can have them on their phone, basically. Anyone could run a liquid node. So doesn't that mean anyone will be able to have like the EBB1 on their phone?
Yeah, no, it does. And I think this is something that the regulators are missing, right? So you get a lot of people talking about central bank digital currencies, and you get, especially out of the U.S., they say, okay, if we can tokenize the U.S. dollar, then it kills Bitcoin, it kills Tether, and they're completely missing the point, right? Like, there's a massive appetite for low volatility, low friction assets. And they missed the second part. The low friction is the importance of this, right? So high liquidity, being able to use it largely however you want in significant denominations. That's kind of the value add here. If you're just low volatility and you don't have the low friction, I don't think there's much demand for that, right? So yeah, no, I think this will be different than other bond issuances in terms of its liquidity. I mean, the fact that you could sell for $100 size is massively unique, right? And this is the big value add for tokenization, right? Is that fractional ownership? That's one of the big innovations of our space, and a big benefit that I think we can offer to the traditional financial world.
Right. But so yeah, to your question, I mean, I don't want to keep beating the same drum, but at the same time, my God, I mean, I think life insurance is so huge. I mean, obviously regular insurance, right? I mean, regular insurance companies, pension funds, they're going to buy into Bitcoin because they really have a problem with keeping up with their obligations, and Bitcoin could help solve some of that. But my God, like life insurance, especially the pure form, if you think about Bitcoin denominated life insurance, I think that is what needs to happen to basically offset the enormous crisis that's going to emerge from the failure of the welfare state, because there's so many welfare programs in the world, in the West especially, where people are just counting on the fact that, oh yeah, I'm going to get my pension out of this pot, or I'm going to get my health insurance, or if I lose my job, I'm going to get unemployment benefits. And historically, that those didn't exist, and people just lived under a hard money standard, and they would have life insurance to serve as like a savings, basically as an instant source for borrowing money. If they needed it, they could borrow against the cash value, and then if a family member died and couldn't, therefore didn't have any income coming in, well then whoever was remaining, they would be paid out, and be able to continue to live their life. And so I think that is just a massive piece of the puzzle if we think about this like post fiat economy.
Yeah, no, I think that's interesting. That's something that Raoul Paul has talked a lot about, and that I've followed is the pension crisis, right? Just the inability of the state to meet their obligations. And that's one of the things that kind of around 2008 got on my radar. And I was like, this is a big problem, and I don't see anybody moving to solve this. And it's just, it will end in tears. There's no other way, but it has to end in tears. And that's a really good point, that Bitcoin could potentially be a solution to that pension crisis.
And it's like, if you look in Belgium, for example, they it's just a little example, but I think it kind of reveals the mentality. Like at some point they were like, oh, we're gonna get in trouble eventually, so like let's start the silver fund, which is of course like silver hair, people get old, so the silver fund, and that's gonna cover the gap.
I might be an investor in that with the silver hair.
Oh yeah. I'm starting to get there too. Um, but so yeah, and so that might like cover the gap. And I remember looking at the annual report of this silver fund, and the only thing it basically did was it would buy Belgian government debt. So it's just like from your vest pocket into your pants pocket. That's what it did. It's just shuffling around paper, and it didn't mean anything. It was just a paper construction with some government debt obligations that were bought and viewed as an asset. Like that's and so you see that so much, and even in pension funds, is that gradually the and the excuse is always like, oh, we need low volatility, low risk investments in these big funds, but they've been obliged to have exposure to government debt, like minimum percentages, like huge chunks of their of their balance sheet are just government paper, and that's going to be worthless. So in a way, Bitcoin bonds are like in a way coming to the rescue, because they're way more long term, having value potential than these pure fiat bonds.
Yeah, I think we're starting to see that play out already. Like, we're seeing fixed income move more into alternative assets, right? So they're increasing their allocations to alternative assets. And that's part of the reason why BlackRock is now buying everybody's houses, right? So, that'll continue to play out. I thought they would have bought Bitcoin before they bought everybody's houses, but I mean, hard to predict, right?
No, yeah, I mean, hard. It's a race for store of value assets. Absolutely. But to me, like the size of bank, the reason why banks are so the banking sector as a whole is so bloated is because they are the mechanism to convert fiat into other stores of value, and it didn't used to be like that. The banking sector used to be a lot smaller. uh, Everyday Joe wasn't owning any stocks. Like that wasn't the way to save. You would just save in money.
So, do you think that's a good thing or a bad thing? I mean, the democratization of finance and the ape army and people investing aggressively on their phones, and is that a good thing or a bad thing?
I think it's just a sign of the times. I mean, it's totally rational for people to do that because the money is losing value every day, and so it's just if you read the books about Weimar and all the other inflationary crises, it's just what happens. You get a speculative boom, and people aren't dumb. Like this is very rational behavior. Of course, you get swept up in some of the speculative gambling aspect of things, but the underlying impulse is totally understandable.
Yeah. What about the other way? What about products in the traditional world that might be interesting to the Bitcoin community? Because one of the things that we've looked at, and I saw news on last week, was like Bitcoin mortgages. I think there's a lot of people, like increasingly, that hold some Bitcoin that is worth a significant amount of money when it's US dollar or fiat denominated, but they have, it's not understood by a bank. If you go to a Bitcoin bank, even if you want to show them your wallets and say, listen, I've got X amount of Bitcoin here. I want to buy a house. I'm tired of living in my mom's basement. They're not going to recognize that. So I think that's an interesting development. I think the details on the Leaden project maybe look a little bit like beta at the moment. The duration looks a little bit short,
Yeah, 2 years.
but if we can yeah, right. So, you want a mortgage to be like, 20, 30 years, I guess, typically, right? So that's one area where I think would be very interesting. And really what you need there is someone with balance sheet to bring it to bear and to say, hey, we want to invest in this space, and we don't necessarily want to rip off everyone's face and get like 10% yields, because the yield also needs to be kind of low for it to be interesting. The interest.
Yeah, it's not how do you say? It's not right. I don't mean it like morally speaking, but it's like it's not sensible, and the market needs to learn that it's not sensible for being able to borrow against your equities. If you have a lot of equities, you can borrow at about 2%. If you have publicly traded equities, maybe like 2% interest rate, get a credit line. And if you do a mortgage, maybe it's like between 3 and 5%. I'm just spitballing. But then if you borrow against your Bitcoin, even if you double your collateral, have 200% collateral, you're still paying like around 8 to 10%. That is just not that is going to change over time, and I think these Bitcoin mortgages are slowly getting there ultimately, because a regular mortgage, what is that backed by like your earning capacity, which is totally, you could get fired anytime, like especially in a volatile economy like we live. And then it's backed by the value of your home. Like I went to Spain, and in 2011 after their real estate crash, and these homes were just like rotting away. A home is ultimately a consumer product, and it's only if it's given monetary, store of value aspects, because the money is bad. It's only in that environment that you get these like 40-year bull markets in real estate. That's not normal, and that's going to change eventually. So in my view, Bitcoin mortgages should have lower interest rate than regular mortgages eventually.
Yeah, that makes sense. It takes someone with balance sheet and understanding of Bitcoin to kind of make that happen. But I think that'll happen probably quicker. Things in Bitcoin tend to happen faster than we expect. I think the sovereign adoption thing happened way faster than I wasn't expecting that this cycle. And I think this is one of those things that will probably develop fairly aggressively in the next, 6, 12, 18 months.
It's so exciting. I just can't believe it's already happening. It's like, what? I remember looking at the numbers in 2020. I was like, huh, these surveys are saying like we're having like 9%, 10% Bitcoin adoption in among households in the United States. that's the same number as internet adoption in 1995. Like, is this some kind of tipping point? And I think it probably was.
Yeah, there's that website called Bitcoin Reserves. Have you ever looked at that one? Where they have,
Yeah.
yeah, it's really good, right? So he tracks like,
I think Rodolfo Novak is running that one.
yeah, exactly right. Yeah, it's a great resource, right? And so he has, all the Bitcoin held by public companies, by countries, right? There's El Salvador. There's a couple other, I think, in Eastern Europe that have done some like, Bitcoin confiscations or something like that. And so they have Bitcoin as well. And then public companies, and then ETFs and ETNs. And the private company part is kind of like a guess, right? I guess because they're probably getting that from news sources and kind of publicly announced positions. But that's probably way higher than you expect. I think, what is his number on that? It's like 7 or 10% of the 21 million Bitcoin. And that's like a bottom, right? Because we have no idea what all the family offices hold in Bitcoin. So that's kind of like a sovereign and institutional like allocation of Bitcoin. And it's, whatever that number is, I forget what it is, 7 or 10% of the 21 million, and then the fact that probably a third of Bitcoin or 25% have been lost previously. So it's actually a much higher position of Bitcoin as a whole than I think probably most people anticipate. Like, it's definitely already become an institutional asset. It's still early, but it's definitely already like well on that path.
Well, and then if you think about like how is adoption going to happen, how is the S, how's the steep part in the S curve, how is that going to happen? I've always said like most people will own Bitcoin and don't even realize it. Like boomers, maybe they won't have a Kraken account and buy Bitcoin or a Bitfinex account. I don't think they will, but their pension funds are going to buy it, so they're going to have exposure to it that way.
Definitely. So shifting gears slightly, I saw on Twitter this week that you shared a chart book from Incrementium. I'm not sure how to pronounce that, last week. So I went through that chart book. I put quite a bit of their charts in the weekly note that I wrote this week because I thought there's some really good ones in there. And they raised, that most of that chart book was talking about something that I've been thinking a lot about recently is like the Bitcoin cycles, right? So Bitcoin historically has had cycles where it goes up exponentially and then it gets hammered and pulls back 80 or 90%. And we've done that, I guess, 3 times, really. And I think part of the reason for that, the reason I guess is around the halving, but I think previously the halving wasn't that well understood. And I didn't really understand it until like the 2016. I can remember that halving and people talking to me about it. And I wasn't really clear on what the price impact would be. Like in hindsight, now it's obvious that it becomes more scarce. It should go up, in when demand is the same and supply reduces, price should go up. So that's kind of obvious now. So I think it's much better flagged now and much better understood
And anticipated.
and anticipated, right? So kind of priced in, really, right? So when the cycles become better flagged, better understood, you'd think that they would, some of the sting on the downside, I think, would come out because people would just expect that to repeat. And then also with so much more institutional participation, we've kind of been like all yin and no yang, like we're all retail previously. And now we've got so much more institutional participation that theoretically should have a longer term view of Bitcoin. And that when it starts to pull back 20, 30, 40%, these guys should back up the truck, right? And that's how traditional markets work, right? Because you've got retail investors that are very news focused and very kind of like jittery. And then you've got like bigger investors, which are supposedly, longer term oriented. So what do you think about that? Like, so I guess the question is, this is a long-winded way to get to the question of, is the cycle still there? Is it prolonged or is it completely broken? Like, what do you think about cycles going forward?
Yeah, I think we'll still have cyclical behavior because the longer you have. I'm reading Alan's book draft, so I think the title. I don't know if the title's out yet, but
Alan Farrington.
Alan Farrington. So he talks a lot about. They talk a lot about volatility, how it's really inherent to markets, and that if you have long periods of low volatility, well, then all the investors just lever up, which just causes the volatility to spike again. So it's like inevitable to have volatility in any market. So I think cycles are not going away, but I do think they're going to change in nature because people anticipate like it's not going to be this perfect. It's just not going to happen. You don't have perfect rhymes, but and also we live in this environment where the money supply is expanded by 20, 30, 40% a year. So it's hard for me to see an environment like that really bear markets of minus 80% who then persist for months. Like that doesn't make sense to me because Bitcoin is such a, one of the one of the interesting things to think about Bitcoin adoption is that if it really is an S curve, well, then that means at some point it's actually going to speed up. We're going to have more and more money coming in relative to previous years, even percentage wise more. Like you get that really steep part. And so once we're on that part, I think, yeah, if you can see 50% corrections, maybe 60% corrections. Um, but I don't see prolonged 70, 80% bear markets. I just struggle to see that unless, of course, who knows, if we shoot to like, $400,000 Bitcoin in the next 12 months, then yeah, of course we can have an 80% correction for a while just to catch the breath and shake out the leverage.
Oh, wait, that's a good segue to the next question. So, how come we're not at $400,000 Bitcoin? Why are we trading at 50,000 ish? Like, we've got like the market, the backdrop of macro continues to be very positive for Bitcoin, but it's just the last couple of weeks, especially, it's traded really heavy, right? Like we've touched up to 50 and then it gets whacked down. And it feels like, every time it's just really struggling to get its legs back under it. So what do you think about that? I know that's another topic that we wanted to talk about today.
I still think back about March 2020. I mean, compared to March 2020, I think we're up like almost 20x.
Yeah.
That's incredible. That's insane. I'm just like
So
amazed.
zoom out.
So I don't know. I mean, I, I just feel like the market is getting used to these higher prices and we need some consolidation probably. And then, yeah, I don't know. There's just, I think it's probably just weak hands, there's still
Yeah.
weak hands that don't really believe that we're going to go much above 100,000, and then for them, if their target is only 100K, if they get, it's easy for them to be like, oh, I'm going to sell now, I can always get back in later.
Yeah.
That's how weekends tend to think, or they lost their job, or I mean the economy isn't doing great, and so people just tend to sell Bitcoin when they need cash.
Yeah, there is this kind of evolutionary pressure in Bitcoin where Bitcoin goes from weak hands to strong hands, right? Like it's people with a stronger understanding and more conviction will buy more aggressively into the dips. And that just kind of happens repeatedly over time. So it does feel like there's kind of this long-term pressure. And then, but, weak hands can become strong hands. So that's not to say that this is like
Yeah.
a heavily concentrated asset. I think that happens for everybody, that you make a little bit of money, you dig into it, you get a better understanding of the asset, and then you become a strong hand. And when Bitcoin dips, then you buy into it more aggressively.
I think almost every Bitcoiner, if you could make, kind of map out the average, cycle of a Bitcoin holder, is like they start up whatever, with a certain amount, and then there's over a period of 3-4 years, you see that amount decline and ultimately stabilize because they realize like, if I just hold on to that, and so in a way,
Yeah.
yeah, they go from weak hands to diamond hands,
Yeah.
and along the way they will have sold certain amount of Bitcoin.
So that's like the price appreciation for Bitcoin. I've always thought of that's the Trojan horse, right? That like people get into it and then they make some money and then they understand it and they get more conviction. And I think that happens for individual investors like yourself and myself. But I think that also interestingly happens for companies and for nation states,
Yeah.
right? So you see,
Yeah.
like who has more conviction than Michael Saylor? Like, I thought I was a bull.
Yeah, right. Yeah, and do you remember the numbers, the Coinbase numbers? It
Yeah.
was like, oh, they have 130 million in crypto. Like people are kind of like laughing, like that's like weak.
Yeah.
That means they've been selling over the years, because they definitely earned a lot more coins than that
Yeah.
over the years. So it's kind of like, it's kind of embarrassing, and I think those kind of stories are teaching other companies to do it differently.
Yeah, I think so. I can see that they would definitely have more of a Silicon Valley kind of VC approach to it, where there's people whispering in their management's ear, like, hey, take some profit, be responsible.
And also, like, you got to burn, right? You got to burn to grow, and so
Yeah.
keep it liquid, keep it in dollars.
Yeah. So I think that kind of like having diamond hands, I think that mentality is kind of becoming more mainstream. Like we mentioned earlier, you see that with the publicly traded miners, you see that with MicroStrategy, you see that with El Salvador.
Yeah.
I think that'll become more mainstream, and you'll just you see more. There's a lot of Bitcoin sinks out there, right? Things that just absorb Bitcoin. I noticed that the Prosper Bitcoin ETF in Canada, that its Bitcoin under management just keeps going up. Like even with the big pullback in the market recently, its Bitcoin under management just keeps going up.
Is that a spot ETF?
Yeah, yeah,
Yeah.
yeah. And so there's a lot of these things like this, like El Salvador is a Bitcoin sink. It just absorbs Bitcoin. MicroStrategy is, the listed miners are,
Yeah.
the Prosper Bitcoin ETF. And there's just more of these things. And then, that just pulls supply, it kind of accentuates and exasperates what happens with the natural halving cycle, which I think is interesting.
Yeah, and it reminds me also of that book. I read it in my early 20s. It's called Maverick by Ricardo Semler, and it's about this Brazilian entrepreneur who weathered Brazilian hyperinflation, and then that other book. It's some guy who interviewed a bunch of business managers in Latin America about how to do business during hyperinflation. And in both books, you basically see a recurring theme is that oftentimes the cash management is so crucial in keeping a business afloat and thriving, rather than traditionally it's like, oh, innovation and kind of whatever you need to do to stay ahead of the competition. Like all of a sudden, way to the fore, even like at board meetings they discuss like monetary policy and things like that, because it's such a major influence on the business fundamentals in an inflationary environment. So I think that's, MicroStrategy is really kind of also bringing that up. It's like for any kind of Fortune 500 company is like, wow, like we got to talk about what we're doing with our cash. This is a giant ice cube.
Yeah. So the other thing that I saw on Twitter recently, which is kind of funny because I feel like I watch Twitter quite closely as someone who writes a weekly newsletter, like I'm pretty up to date on the news, but I completely missed this thing about the Asian sell-off, right? Which kind of explains what I was talking about before, where it just feels like Bitcoin is struggling to get its legs under it. And I can't really figure that out given the, kind of broader macro. I guess markets are all volatile right now. We had the Bank of England rate hike. We had FOMC last week. So some volatility is to be expected. And Bitcoin is often the canary in the coal mine. Like it gets hit harder, as it did kind of around Thanksgiving. I think everything was closed and then Bitcoin got whacked just because it was open and liquid and people could trade it. But this Asian sell-off thing is kind of interesting because apparently there's, the crackdown on Chinese exchanges is kind of delayed. And apparently Chinese users have until the end of this month to get their Bitcoin and their digital assets off exchange. So that's kind of an interesting one. Have you followed that at all?
Not very much, and until very recently, I saw it. Yeah, and I mean, it also, but it makes sense, right? It makes sense that that's a factor, and then also, I assume that the mining crackdown also had to have resulted in miners selling
Yeah.
some coins that they didn't expect to have to sell.
Yeah, so on that report, the chart book that we mentioned earlier, that was kind of their explanation, right? They're like, they expect to see a delayed peak for Bitcoin. They said the cycle's still intact, but we'll probably see a delayed peak. And they think that minor crackdown probably derailed the bull cycle a little bit. And that's why we're behind schedule a little bit.
Because yeah, I mean, it has to be like from a Chinese point of view, like if you live in China and like Xi Jinping is just like amping up the autocracy and like kind of like there's just so much political uncertainty, and the economy is already so closed off, like it must be I mean Bitcoin must have enormous allure uh for savers.
Yeah, no, it definitely does. And, being in Taiwan, there's a lot of Taiwanese money in China that wants to come back to Taiwan and not be in China. And with the capital controls, like if there's capital controls, there's just naturally money that wants to find a way around the capital controls. And I think historically, Bitcoin has been a big part of that. And I think that's also part of the reason why mining has been so big in China is like, number one, there's a lot of high net worth people there that have made like a lot of first generation money, right? So you can go and have a meeting with Mr. Chen and pitch him on Bitcoin mining, and he can say yes and give you 20 or $50 million like right away. Whereas in the West, it's so much more institutionalized. And then number two, if you think about it, like if you bought $100 million of, it's hard. It would be hard, I would guess, to buy $100 million of CNY worth of Bitcoin with CNY, but you could buy $100 million worth of ASICs and then over time mine Bitcoin and then move it offshore.
And probably, write off some of the expenses or even get subsidies for running a business or something like that.
Yeah, so I think that's probably been a big driver of Chinese mining and part of the reason for the mining crackdown. Like, I don't think it has nothing to do with meeting carbon neutrality goals. I don't think that's it at all.
I remember looking back at all the tweets that I've ever done about like Chinese capital flight, and it's just so clear that since 2015, since the yuan became weaker, that there's just been increasing capital
Yeah.
flight, and everything points at that the government wants to curb that.
Yeah, in 2015, 2016, there was Bitcoin versus like the inverse CNY USD. Like that was the chart, right? Like a lot of the Bitcoin
Yeah.
rally in 2016 was driven by capital flight out of China for sure. So,
Exactly.
even though they've, I guess, theoretically left the market, they're still a big part of the market, I think. So that's an interesting explanation for why Bitcoin has been trading so heavy recently. It's kind of an interesting one.
Yeah, and it makes you wonder as well about economies like Turkey and stuff, where like they're getting into hyperinflationary territory. Like, what does that do? Are people still so happy to just go into the euro or in the dollar if we're also having inflation?
Yeah. And how able are they to do that?
Good point. Yeah.
So I guess, wrapping things up, like what looking for, what kind of excites you about the world of Bitcoin? What really gets you excited about 2022, and what are the things you're kind of looking forward to as we start the new year?
I want to say it's really the continued development of Lightning. I think it's just incredible what's going on. And I think without Lightning, we wouldn't have had El Salvador adopting it as its sovereign currency, right? I mean, that's what unlocked it. Like people were quick to downplay Lightning the past few years, but I mean, what an achievement. And then there seems to be so much more possible. And now with the Taproot activation, it looks like there's a lot to be gained in terms of um, I guess anonymization, like confidentiality in Bitcoin and multi-sig contracts and to me, my the way I envision the future of Bitcoin banking is that you won't so much have Bitcoin banks that hold Bitcoin, but more like key banks that store keys in multi-signature environments that may not even know the value of the keys that they're storing, and so that ultimately the sovereignty can remain with corporate entities and individuals, and so that they're not reliant on this one custodian. And so I think things like Taproot really is another milestone on the way to that future. And then the big thing, yeah, for 2022, I think Bitcoin mortgages. I think that's huge. Being able to actually use your Bitcoin. For monetary purposes, for investment purposes, using, I mean, it's kind of what I was talking about with the life insurance being like the backbone of regular families because they could borrow against it. Your Bitcoin stash is increasingly that, especially if the interest rates go down on Bitcoin loans, and if we get something like Bitcoin mortgages, that's huge. But then also the sovereign adoption. I mean, we haven't even, it's a little bit of an old horse to beat, but it's like at some point central banks are going to be buying Bitcoin, and that is just they've been buying gold for however long now. They've been net buyers of gold. These central banks, at some point, some of them are going to be adding Bitcoin to that position, and that's another giant source of demand. It's just, I mean, it's just incredible what's going on, and it's hard to predict which is going to come first.
Yeah, the other interesting thing I think is that in 2016 the narrative kind of changes from the white papers behind me, from peer-to-peer electronic cash to digital gold,
Yep.
and El Salvador is really bringing that original narrative back, right? And the cool thing about that is I don't think any of the Paul Tudor Jones or the Wall Street kind of investors, they're looking at this as like an inflation hedge, like a high beta inflation hedge. They don't have the network effects of digital cash or the benefits of confidentiality in like this global kind of trend towards slightly more despotic governments, right? And more kind of government oversight into what you're doing. Like the values of confidentiality and the network effects of peer-to-peer electronic cash, I think, are completely not in anybody's model.
Yeah. Yeah, I think Paul Tudor Jones even his Bitcoin exposure is purely futures contracts, so he just
Yeah.
like rolls them over, and it's such a Wall Street way of doing it. And I wonder actually what his what his loss is. Like he must have a percentage that he loses every year.
That's why the ETF is such a big deal, is because for Bitcoiners, I think it's a bit of a step backwards. Like why can't people just go and buy Bitcoin? Why do you need all these kind of financial products around it? But the mandate and the regulatory restrictions are a real deal. And that's, you can see how big that demand is again by looking at the premiums in the listed miners, is that people are investing in these things as a proxy to Bitcoin.
Yeah.
And Samson has mentioned this as well. The reason why the SEC, my guess is why the SEC hasn't approved an ETF is because they're worried about what it'll do to price, right? Nobody wants to be the guy who approved an ETF and then drove Bitcoin to $1 million. Like, do you have some explaining to do?
Yeah, the guy who destabilized the dollar or something like that. I mean,
Yeah, yeah, yeah.
I think there's going to be a whole new generation of FUD, once we go above because I've been wondering. I wanted to ask some technical guys, technical analysts, what they think about psychological price points in Bitcoin. Because initially it was like, oh, $1 was a price point, 100, 1,000. Probably 100,000 is that too. But I wonder from like a market cap point of view, because we're seeing more and more institutional investors, and so to them it's like, oh yeah, it's almost a $1 trillion asset. But like once we go to like 3 trillion or 5 or 10, it's different. It feels different. It's people are going to act. There's going to be an increased amount of alarm, I think, from governments and large institutions that are, whose interests are kind of counter to that of Bitcoin holders. And so I think the whole narrative about pollution is going to ramp up again, and also that it's like undermining the dollar. I think they'll be blaming Bitcoin for causing inflation somehow.
Yeah, I think those are obvious regulatory attack vectors are the ESG thing and undermining the dollar, right? And that's kind of one we're I guess both of those we're pretty used to. But I think an interesting thing around the infrastructure bill is I think a lot of these policymakers, the Elizabeth Warrens of the world, I think that was the first time they realized that, hey, Coinbase has like 50 or 60 million accounts, and these people all have skin in the game, and they don't want to see their investments go to zero. So they're going to be really aggressive in contacting these people and letting them know, hey, this isn't going to work out. So I think those policymakers got a taste of how important this of an issue this is to a lot of people, and maybe that'll play in Bitcoin's favor kind of going forward.
It could be. I mean, like, remember the pirate party in what was it, Denmark or Iceland?
Oh, exactly. Yeah, yeah,
Yeah, I mean that was like based on just like file sharing, but like I can imagine Bitcoin really becoming a big political force. Like for a lot of people, it's like their life, and so why wouldn't you become a single issue voter? Who cares about left or right if you can preserve the value of your savings for your family, you might just vote Bitcoin.
definitely. All right, I think that's a good place for us to wrap it up. Thanks a lot for your time today, Tuur. I hope we can do this again. This
Yeah,
is a great conversation. I feel like we could go for like 4 or 5 hours.
it was a lot of fun.
All right, thanks.
Bye, Jesse.